So this morning I thought I'd do something a little bit different and record a video. So these are all my price levels that have been on my charts. They have not gone anywhere. To the left is going to be SPY. To the right is going to be QQQ. The one thing that you will note is we left all of these sellers up here. So when the market got away from them, right, and this was supply, these guys have all been left behind at all-time highs. So what you have to be cognizant of is, do they have regret that they didn't get out and take profits at an all-time high? Now, this is what we love to see because now we have more levels to trade versus trading at all-time highs. Do note that we have buyers, but the buyers are now down here, which is where we started to bounce overnight. And the market is marginally heading higher. We got some overall demand forming here as well. Now, a couple of things. So I think that with tomorrow being triple witching, which means all options expire, your daily, your weekly, your monthly, your quarterly, it is the final option expiration before year end. So all of the hedge funds and the market makers have to balance out all the portfolios before year end. What I would do is you should only, and again, I say this all the time, but I really am saying this, only take a trade at a level once you have confirmation. Now look how nice our levels held. And so what I'm going to do is I'm just going to turn off the supply and demand. And again, I know I've been a big advocate of Bryce's supply and demand indicator, but guys, it is money when you can see where the buyers are now forming while the market's open or the sellers are forming while the market is open. And while it doesn't guarantee a trade, it just makes such a higher probability of an outcome, whether you're going to stay in it or you're going to exit. Now, let's take a look at this, SPY. We have a gap fill down here on the daily that has not yet been filled. There is no gap above. We don't have one. So this will act as a magnet and this gap will fill 80 to 90% of the time. When? I don't know. But what I do want to keep in focus is that if we just trade between our levels, I would look for the market, depending upon the pre-market is obviously strong. We had a very strong level channel here of 585, 586. They consolidated overnight. They moved higher to my next level of 590.33. We are now starting to push up to 594. I would wait for a retest. So what I would look for is for us to retest here to go higher. Or what I would be looking for is for us to break below, retest, head back to the channel. Now, when you have a channel, and I have a couple of channels on here, I have them there because those are very, very strong areas where the market has consolidated in the past. So you'll note that we have a channel here on QQQ, and then we had a very strong channel here yesterday at 523.64. And as soon as they broke this channel, oh my gosh, that is where the flush happened. Okay, so we are getting back up to, again, the level. We tested it. They're moving this higher. I would look for this 523.52 as a possible reject. So again, don't chase it out of the gate. Ideally, you want to see it come down, go higher, or what you're going to want to do is you're going to want to see it go higher and then come back down. I would not go long this market, again, even though we are seeing some dead cat bounce, until we get above 523.64 and it holds and we really start to get some momentum to the upside. So do watch and see what is going on with your Apple, your Google, your Microsoft, and Meta. Keep an eye on the entire market. It's recovering somewhat, which is a good thing. Most of these were probably getting close to a 50% fib level retracement. If I had to guess, let me take a look at Apple. Apple in the pre-market really wasn't doing too much. But again, Apple, of all of these, is one of the most overvalued. And then you can see, here with, again, Amazon drop, Alphabet drop, Microsoft drop. So you could even draw a fib level on each of these and then, excuse me, keep that as your target. The other ones we're going to want to keep an eye on, obviously, are going to probably be the chip sector. So Micron had earnings last night, and it's selling off hard in the pre-market. I think it was down about 12%. You could see NVIDIA came all the way down to my price levels and then overnight bounced. So we're trading again within the areas. Let me just turn off the supply and demand. When you have supply and demand also where it's overlapping, right, where you have red and green together, that means the market is balanced. That means the buyers and sellers are just trading dollars. They are agreeing on price, whereas here we believe that the sellers are up here, the buyers are down here. These, again, are very short duration overall demand levels, 45 minutes, 30 minutes, 30 minutes. So we break this, and then again, we are going to be heading lower. I think I've used AMD in my weekly watch list that if we break below, the 120 mark, could be lights out. So keep an eye for weakness on these chip sectors as well. But again, overall strategy for today, lots of patience. We still got an hour and a half till the market opens, so these levels could break lower, they could hold higher. Just make sure that you are giving the market 15 to 30 minutes to open to see, do they pump this higher and then dump it in advance quad witching that is coming up. So with that, if you have any questions, let me know. But I just thought that might be helpful for me to narrate and talk you through what I'm watching this morning. So with that, guys, trade safe, trade smart, and we will all talk later. Take care.